Welcome back, and the TCS top brass is here. We have with us NGS COO and Milind Lakkad, the CHRO, actually the more important person in a company like TCS. Gentlemen, congratulations actually for beating street expectations. I have a lot of negative scenario questions, but first the positive one, NGS. 2.2% growth and an improvement in margins is not a small achievement given the circumstances. So what led to that, both these positives?
I think it's a very, very satisfying quarter, 13.6% year-on-year growth. I think we stayed very focused with customers, being part of them, working with them, put feet on the ground to see what matters to them in these tough times, right? Especially as they grapple with uncertainties in the macro side. What does it mean for them to stay ahead of the curve? Where is it that new technologies can help them bring efficiency, help them bring automation, and then at the same time work with them to define the future now, right? And I think that's what really is. In a nutshell, I think it's about cloud. Right. Everybody moves everything to cloud, and
as you call the race to cloud.
Yeah, race to cloud, and then it's about you don't stop by moving to the cloud. You keep improving it, you keep bringing in automation. The beauty of these digital technologies is that a new technology comes in, a new way of working comes in every month, right? So short is the improvement possibilities, with the result that customers are always willing to adopt something new for bettering the growth, bettering the efficiency, and bring in innovation to differentiate themselves in the marketplace.
Okay, well, I have more on that, but before that, Milind, while it is a large number you hired in terms of freshers, the street is a little worried that your total headcount is actually a few thousands less. Okay. Is that preparing for likely fewer orders in this year?
So a couple of points I would make. One is basically if you look at year on year, we have grown by 57,000 people.
Yes.
So that's almost 10% growth on the number which we had last year. And we also hired a lot of people last year, and basically close to 200,000. Yeah. And then a lot of talent development over the last 3 quarters, and eventually they're getting deployed now, in this quarter, and thereby increasing the utilization a bit, and also efficiency in the organization is basically causing this headcount to come down. But actually, if you look at it, look at 2 years together, I think will be even.
Yeah, but it's only the third time in the entire record of TCS quarterly that it is lower. So is there just a preparation?
It is.
Let's look at the orders and then hire.
Let me assure you, it is nothing to do with demand. Okay. It is everything to do with efficiency, and it is everything to do with investment which you made.
Fair.
And she just wanted to talk about your deal wins. In FY22, the total contract value or the deal wins went up by 10%. And that's helping you clock in a double-digit growth this year in FY23. 9 months FY23 TCV is up only 3%. Does this not signal that growth next year will slow down?
I don't see it that way, but I think it's a function of the order book that we have, for sure, that we have to keep executing it. As we see it, there is a very strong pipeline. As I said, the qualified pipeline looks very good. In certain markets, the decision making has been a little slow, but we don't attach too much to the macro situation and the client situation, because we work very closely with customers. If we look at UK, for example, when so much of uncertainty around, we have grown year on year that market by 15.4%. So I think across verticals, whether it's a broad-based order book that we have got, broad-based pipeline that we have got. So the kind of execution rigor that we have brought in, the kind of growth that we are seeing in the cloud and artificial intelligence and machine learning kind of work. So I think it all looks positive, and gives some weight for the macroeconomic uncertainties, especially in Europe, where the decision making will become clearer in the next 6 to 8 weeks' time.
But there is a correlation between the deal win growth rate and future growth, right?
Yeah. No, it is there, but some of them are multi-year deals. So you have to look at it from a perspective of, for example, whatever the deals that we clocked last year, it's typically it's not for just 1 year. It's for a multi-year life cycle, multi-year deal. So in the short term, if you really look at it, for the order book that we have for the coming year, 23 and 24, looks positive. I think we've got an order book which we have to execute well. As long as we execute well, which we are really good at, I don't see a particular challenge in it.
Okay. Just one more question about Europe. You repeatedly said in the press conference Europe is challenging, and that's 15% of your revenues. Is it just slowness in decision making, or are you seeing deal cancellation or no new order wins? What's happening in Europe?
See, there are two ways to look at it, right? In these kind of certain uncertainties and amount of caution that the customers express. First thing is the cost and optimization, vendor consolidation, those kind of opportunities are really picking up in Europe, right? Those are the ones which are getting accelerated. So there is a consolidation opportunity, there is a market share gain opportunity for TCS. In that
Even in
aspect.
Europe?
Even in Europe. But on the growth and transformation side, people are wanting to get this winter over, right? And see that, look, in that sense that the next 2 months are going to be the key thing. But at the same time, they all recognize that the journey to cloud and journey to a cloud native, microservices driven, ecosystems driven architecture in which they want to redefine their future is irreversible. They've gone that path. The pace might take a little slow, but if they delay it for too much, then the technology change will be too huge.
So you're saying that transformational deals are taking time. Those would be the high margin ones, right? Well, Milind, I wanted to ask you, how are the wage hikes in your off-site categories? I mean, I'm trying to gauge how severe is the wage pressure abroad.
I think what we have given last year, I think we don't expect that to change in the coming years.
Okay. Because
so it is. So I think
the macro numbers are indicating wage pressures are stiff.
Yeah, it is there, but we have been able to. That's why we have been able to manage and our operations efficiently and effectively, and just ensure that we actually do similar to what we do normally every year. And I don't see that changing right now.
So there is a pressure there in terms
of wages. But we have to respond to those pressures very, very well, right? By operating it better, by being able to price it better, all of our deals, and all of those things come together, and thereby we are able to do that. And I don't see actually again see that changing in the coming years.
Okay.
NGS, 1 minute. Yeah, sure. NGS, I just wanted to know whether there were sectors that gave you more orders. I'm looking at it from a macro standpoint. While there were pressures in, for instance, retail and finance, Goldman Sachs has sacked people. We've heard positive things in commodities, metals. Do you all also service those sectors, and did you find more orders there?
It's a fairly broad-based growth that we have seen. For example, retail, CPG, and travel and hospitality grew upwards of 17-18% for us year on year. Banking, financial services grew by 11%. Manufacturing grew by about 12%, and rest of the verticals grew between 9 and 10% year on year. Even in the order book that we have, the pipelines that we have, both in terms of mid-sized deals as well as large-sized deals, is very, very broad-based across markets, across verticals. So even the large deal pipeline looks good. We are working on some key large deal opportunities which we hope to convert, going into the next financial year, right? So overall, I do not see any slowdown in terms of the deals that are coming into the pipeline, right? But the decision making in certain markets are a tad low or delayed, given the uncertainties that they want to take into account.
So TCV to revenue may slow down. That is, book to bill may slow down.
No, TCV to revenue will be intact, but making it into pipeline to TCV might get delayed.
Qualified pipeline to TCV.
TCV might get delayed a bit, specifically in growth and transformation opportunities.
Okay. Milind, FY22 was a supernormal year for employees of TCS, right? Not just in terms of wage hikes, but you gave a lot of bonuses, etc. Do you think next year we will see an overall lower wage bill for TCS because attrition is easing? overall, including bonus?
I think we'll, like I said earlier, I don't expect that to change, but we'll obviously play it by the ear and see how the situation evolves, and based on that make the decisions.
How much may attrition ease, you think?
Pardon?
How much may attrition ease?
No, I think, this quarter itself, although LTM wise we are 20 basis point lower, but if you look at quarterly annualized attrition, we are close to 6% down. And I expect that trajectory to continue.
Thank you very much, NGS.
Thank you.